Hi, and welcome to the Naples Commission. I have an amazing guest here with us today, Miss Ashley Hum. Ashley is a local business broker with 12 years of experience nationally and also in the Naples Bonita market. Ashley is a great friend and gives practical advice. I'm excited. Ashley, can you take a minute, introduce yourself, tell us a little bit more about your background and what you do?
My name's Ashley Sunshine Broker. So I've got the little things beside my name. So I'm an accredited business intermediary. I'm a senior valuation analyst. So I do business evaluations for some CPAs, divorce attorneys, and things like that, or just to help people kind of see where they're at, see if they're ready to sell, see where their numbers are looking. And, basically, I just love to help people mainly in Florida just buy and sell businesses. We love to have people come move here or retire and just enjoy their Florida life.
That's awesome. And knowing that I have a relationship with you, I want to make sure that our audience gets the full value and the full experience of getting to know you. So, one of the first things that I realized working with you and learning more about the Naples market is how transparent and honest you are, because I feel like a lot of people in this world can get really hyper focused on trends. And just a quick example, one of the trends that fell into was looking at coin laundry and car wash investments. And you were very fast to kind of tell me, hey, maybe in other places and other geographies, but right now in the Naples market, that's really not the best type of investment when you're looking at businesses. And you gave a lot of practical reasons why. So before we kind of step into that, can you just give us like what's kind of a market overview in 2026? What are you seeing that's working really well? Maybe what are you seeing that isn't working so well?
So, as far as stuff that people are really looking for, they're looking for a lot of construction based businesses, a lot of professional services, CPA firms, bookkeeping firms are a good example of a professional service. And then, as far as the other services, they would like mostly commercial or like a mix of residential and commercial, just so it's like a little more even kill with the clients. But people are really looking for service-based businesses with contracts like such as lawn care, pest control, pool routes, HVAC, because they've got like the every 6 months type stuff. Some electricians have some yearly contracts and different things. Even some plumbers have contracts with people about their water heaters and things like that, extended warranty type things. Those are some of our top sellers and top interests that people have. Also, porta potties. People love porta potties. Private equity loves to buy porta potties. So, if anyone has a porta potty company, I probably have like 5 people to buy it. So, let me know. Yeah.
No, that's awesome. And, why don't you talk a little bit about so someone new to Florida like me, I learned about the reasons why maybe in Florida a coin laundry and a car wash aren't a great buy right now is because of, I'm sorry, not geography, but the environmental issues.
Yeah.
Can you talk a
So,
little bit about that?
yeah, the environmental issues, I think you and I had spoke about that a little bit before. Car washes, laundry mats, dry cleaners, they have a lot of environmental issues that they're facing right now where, they have to clean their own water, they have to make sure the environment is safe. So there's a lot of things coming at them, a lot of changes happening, new regulations coming out all the time. So that makes it a little uncertain. If you own like a dry cleaner, it might be okay today, but maybe next year they pass a new law where you can't use these chemicals or can't do this, can't do that. And it just makes it a little uncertain. So the banks are a little hesitant for those. As far as the car washes, we do have one on like every corner. There's an overabundance of them. There's actually a moratorium on building new ones in Lee County, so they're not building any new ones right now, like in Cape Coral, for example, in parts of Lee County. So when there's that many, the county steps in. They love to get money from taxes. That's kind of when you're like, I should probably think about this. Now, the other thing is you want to look at your geographical information and like statistics, demographic statistics. When you have the housing prices like 600,000 and above, like in Naples is mostly that market. Most people don't really use a laundromat very often. they would probably be more likely to use a maid service that would maybe take their things off site. And a lot of those companies have their own commercial cleaning machines and things where they could clean the comforters and bring them back. Those type of cleaners do a lot of the Airbnbs and things of that nature here. So a service for them or a provider that provided that for them might do really well. But just like a coin laundry, it could be hard. There could be places where they might do okay, but you'd really have to do a lot of demographic studies. And the bank is a little leery of those type of businesses right now. And in retail and restaurants, those are hard to get loans on right now. As you know, it's very seasonal in Naples and Marco, especially. Cape can be that way too, and like Fort Myers Beach and on the water. So restaurants and retail can have a really hard time in off season, especially the summer. August and September are typically their worst months. So when you have someone coming into a market like that, if they're used to like a more stable market where there's not like snowbirds per se, it can be a little daunting. Right now, we have a lot of businesses coming onto the market because first quarter is what? Season, right? So we get those nice, like good numbers, and then we're about to fall down into a downward trend for the summer. Now, not every business, but a lot of them, because even construction, if you're doing pavers, doing whatever, you might have some jobs lined up from people that were here during season, but then you're going to complete those, and then those people aren't going to be back until the winter, like after Thanksgiving usually, or around November sometime. So that's just where we have to really talk to people about, hey, what are your goals? How much money do you have set aside? How much money do you need to make? But I think going back to your earlier point, the main thing about what business would be right for you, for example, right, is like, what's your background in? Like, what are you good at? Like, what do you bring to the table that maybe you could put into this business to really get it to the next level? Because maybe it is a car wash if that's what you have experience in, right? Most people, most of their jobs are office jobs or some kind of other, type of job. Like for you, like finance, like you could buy a bookkeeping company. You would know how to like hire the right people. You would know how to hire the right CPAs, those type of things. Like for me, could I do a property management company or a home watch? Sure. Like I have a lot of experience with real estate. I've owned a lot of rentals, had Airbnbs, done all the things. But do I necessarily need to go out and buy a paving company? Probably not. Like, I probably don't know what I'm doing. If it was like a handyman service, okay, I've got a lot of experience paying handyman to fix my Airbnbs and my houses, so that'd probably be okay. But it's just those type of things. Like, what are you good at and what do you bring to the table? Because that's the skills you need to make the business you buy soar, right? Because you've got to do something more or different or better than they're doing now to take it to the next level. So the people that have it now, they might be making 300 grand, right? But then if you have a loan, you're gonna be lucky to make 150. You're not gonna be very happy with that. Like you're gonna want to grow that and make more than that.
Right. And so many ways to go from this. I'm glad you answered that because I just want to take a moment to edify you. One of the things that I appreciated, being new here, getting to know people, getting to know you, was how transparent and open you are and realistic you are about the market. Not every business person is going to say, hey, Sean, I know that your buddy said he was interested in this. I know that it looks good on the outside, but here's the real issues and why that's not a good idea. And that transparency and that trust is probably the cornerstone of doing business here in Naples. And so just wanted to take that moment to put the spotlight on you and just say thank you for your transparency and your honesty. Now, shifting gears, some of the things that you said goes into some of the prior conversations I've had is, what would you say to someone who comes to you and says, hey, I want to buy a business for quote unquote passive income? That seems to always be in my industry, maybe in your industry, is people looking for this idea of passive income. How passive is it really? Because just like you said, it sounds like most people who get the best outcomes are those who are picking businesses that are aligned with their skill set. And it's not necessarily passive, but from my observations, it's usually someone taking the step up from more of an implementation role into a delegation and communication role. And I just want to hear your experience on how passive is it really, and is it more of just taking a new role of ownership?
Oh gosh, that's a tough one because I do get that like all the time. They're like, I would just like to make 100, 200 a year passive income, like absentee, owner 100% absentee. I don't even live in Florida. I'm like, well, this would be really hard. Like, could it be like part time? Could you be an implementer? Could you be more of like, just someone that's coming in and having a weekly team meeting and then following up with people? Maybe. It depends how many employees they have now. And I would say it's going to really be a case by case basis. Like if you buy a bookkeeping company, right? After a year or two, could it become somewhat passive for you when you've got it up and going and really running well? Yeah. But day one, you're probably going to be in a pretty high level role, if not the actual operator. A lot of these small businesses, especially under $1 million, is going to be the person you're buying the business from is now going to be you, right? So they're like the CEO, they're the head of everything, right? Now, a lot of people do try to step back and get key employees, and that's great, but they still have a very big role that you're going to have to fill temporarily until you can implement the changes to get the money up to be able to hire someone and then still make that money. The type of businesses that really make that type of really passive income money are like very expensive, very high level, maybe a consulting firm type of thing. But again, the main person is usually still a backup, right? So, like, if I'm sick, now you are taking over my cases or whatever people I'm working on. So, if you don't have those skills, and I quit it, you're kind of screwed, right? Because you don't really know what I'm even doing. So it's kind of like you don't really want to put yourself in that situation. It's a lot of the same thing with the trades. Like if someone wants to come in and they don't have that license, it's not that they can't hire someone. It's not that they can't pay a qualifier. But if that person leaves you, right, and you're a roofer and you don't have the license, now what? You can't do anything till you hire a new person. And then how are you going to pay your guys? You're going to have really upset clients. You could have a backup person. You could meet other people. I'm not saying that. But I think these smaller businesses, stuff that you're going to purchase, like an everyday person like you or I would purchase for something under a couple million, I think you're not necessarily buying a job, but kind of in a sense. And then you could grow it into maybe like what you're talking about. But the stuff over 5 million is going to be mostly going to private equities because there's really no loans for those type of things. And those are where you can more buy an income stream, I would say, because like for me, I have a lot of clients that are in this position where they're making a couple hundred grand. So let's just say it's you and you're like, actually I'm making 200,000. I have money to put in. What would I have to spend to make 200,000? Right? I mean, it's going to be a couple million. So you're
Hmm.
going to have to put in at least 10 to 20% on an SBA loan if the seller will take an SBA loan. So we need to find you a business that's making over 400,000 so you can pay the loan and then pay yourself the 200. But you see, you don't have any more money to pay anyone else. So that's where you've got to grow it for those couple of years to be able to replace yourself. Now, if you could stick in it 2 to 5 years, do I think you could replace yourself and kind of be there as needed? For sure. Like you're just buying a job. But you are buying a job until you put in the time and energy, I think 9 times out of 10, to replace yourself. These businesses just aren't big enough to pay like another CEO or someone else. Like, unless, so it's hard, but I think it's great if you're just like at a job that you don't love and you want to put the time and energy in for a couple of years. That's the perfect position if you have a couple bucks to put in to do this. Like I have a couple of people that I'm working with right now. One used to be a teacher and now he's buying a business. He's going to make more money than he's ever made. That's super exciting, but he's willing to get down and dirty and do the work, right? He's excited to do the work. And later on, 5, 10 years, I'm sure he'll just hire people to replace himself and then he will have that money. But he's going to have to put the time in because he's also starting at a lower level buying a less expensive business because he doesn't have 300 grand to buy a $3 million. So it depends on your goals. And I think that's why I wish people knew more about business brokers and that we even exist because we can have these conversations and figure out like you do with the financial planning. What do you need to do? What do you need to do? What are your goals? What are you good at? And then it's like matchmaking. You know what I mean?
I mean, you're considered a market maker. So you're exactly right. It is like matchmaking, creating a market for your buyers and your sellers. And I'm glad that we actually got to spend a lot of time on a lot of this was focused on buyers. And before I shift to maybe a little bit more on the sellers, one thing that I wanted to ask you is I advised, and this was 5 or 6 years ago, and things change all the time. I advised on a small M&A deal. Person was purchasing a small business with an SBA loan,
Mhm.
and they were basically a little bit concerned towards the end of the deal and wanted to look at an earnout structure. But it was
Okay.
very hard because at that time, part of the SBA loan process didn't allow the prior ownership to stay on. I think there was like a maybe a 6 or 12 month, like by the end of 6 or 12 months, they had to be fully out and transitioned, and whoever took on the loan had to have the basically the CEO, president title, role, and function, which I guess my question is that still in place today? Is that still kind of a normal stipulation of the SBA loan so that buyers are aware that, hey, this isn't just you buy a business and things continue as is? Like you kind of have to get in there if you're going to go the SBA route?
It really is very similar to that. I actually am dealing with that right now because, again, to my point about the licensing, it can take someone 1 to 2 years to get the license, even if they have prior experience. Like I was dealing with a roofing guy. He's been working for a roofing company, but he needs to get the license. He has to have people sign off on things, do the classes, do the tests. It can take a year or so. And yeah, you're right. There is still only a year built in there. So the seller does need to be basically out of working in the business after that first calendar year. Now, I would say on a another note, they do have something now with SBA loans where the seller can actually do a 10% seller note.
Okay.
So it's really cool because if they have like an employee or someone that they really feel is a good fit, they could help them essentially with their down payment by having that seller note. So that's really interesting, but it's got to be like someone they're close to. It's got to be, they're not just going to do it for anyone, right? Because they don't get paid until the SBA loan is paid off. So the SBA loan is typically with no real estate 10 years. So after they paid that off in the 10 years, then the seller note would be paid off after that. So the cool thing with that is it does open the door to more people that might not have that like 300,000 down, right? Or maybe they could do 150 and the seller could do 5% note. So that's really cool. They are allowing that now. That's great. But that's back to the key employee thing. It's much better if they have a key employee because they could stay on, but the seller cannot. Now, as a consultant, or if you just want to give out their phone number or something like that, that's off the record, I guess would be okay from what I understand. But in a paid full-time role, they cannot. So that's a bummer. Yeah.
Yeah, and I think it also protects from, if I understand correctly, it has to do with like anti-money laundering, creating value or getting loan money without going through the underwriting process directly. So I do understand, right? So like
Yeah.
if you're a seller of a business, rather than just going to the bank and getting a loan, you get an outside buyer, but you stay in the business. I can see why they came up with that regulation, but it's something that not a lot of people I think know about it. So that's why I wanted to bring it up.
Yeah. I think you're right because they have the same thing. Like if my LLC owns a house, I can't then go buy it from my LLC in my name with a loan, right?
Right,
I can pay cash, but like I can
right,
get a loan because it's like it looks like money fraud or like mortgage fraud or it's weird.
right,
So
right. It's
yeah,
basically making sure that people aren't doubling up or going through
it's
outside
the
channels,
arm's length transaction they say.
from my
Yeah.
understanding. But it's interesting nonetheless. And so, kind of the last buy side question I would be is where are you currently seeing rates for SBA loans fall right now?
So it's typically prime plus 2 points, and what are the rates now? 5.7.
Thereabout, yeah.
Yeah. So they would be 8.7 or so. And again, it's depending on their credit. So like that would be best case scenario. If their
Mhm.
credit's not as good, it could be more, just like when you get a house. It's a little high, but that's the thing. If you have a broker, we can sit down, do the calculations with you, pull out our calculators, think about, okay, the business is making X now, your loan would be Y. We'll get the projections from the bank later on, obviously. But just in the beginning, even when we're looking at stuff, I think it's like back to your point of like how much money you need to make and what your goals are. if you need to make 100 grand, but the loan is 50 grand a year and they're only making 150, it's like, okay. But if they're making 100 and the loan's 50, you're not going to double it in a year, right? You're not going to probably even get it up 25% in a year. Like usually it's 5 to 10% year over year, right? To
Mhm.
grow something. So you don't want to put yourself in that position if you're not going to be able to make enough money. So you need to kind of figure out these things. And that's one thing I do like about SBA though. You have your broker looking at it, you have a bank looking at it, and a third party business evaluation as well. So your broker will do their own evaluation for you as a buyer's broker, but then the bank will hire someone too. So
Mhm.
if all of those people are not in alignment, it's kind of like, okay, I shouldn't buy this. So I do like that about SBA because they're very particular. They go through all the documents with a fine tooth comb. It can make my job very difficult, but it's good because I feel like you as a buyer know I looked at it, the bank looked at it, and a third party business evaluation appraiser also looked at it. And I just feel like then you know, hey, these people are professionals. This is what they do every day. And you had a lot of eyes on your deal versus this kind of common internet thing like, I don't want to deal with brokers. I want to just buy it directly from the seller. Okay, but you're not hardly going to loan that way because the deal is not going to be structured properly. You're not going to know what it's even worth if it doesn't have an evaluation. So it's just going to become like much more difficult and stressful for you. And I think that's where a lot of deal fatigue falls into, and people just back out of doing it. But if they would have had help, it could have been more seamless. No, it's a long process. And so you're looking at like 90 plus. When you have health and you have like someone that's been there, done that, it's just a lot easier and less stressful. And you know, these people are out still working. Like if you were to buy a business from me tomorrow, you'd still be doing your job all day, every day. This is like a full-time job to buy a business. So you need to have someone helping you. So I can be like, okay, Sean, today I need X, Y, and Z. I can send you a picture of the back and front of my driver's license. That's easy. Oh crap, I forgot this part of the credit app for the lender. You have that person that's kind of like on you, texting you, calling you, just reminding you, hey, I just need this, and then putting a packet together for you. And I think that way it's a lot less daunting because you've got to make a business plan for SBA. You got to do projections. You got to do P&L like projections. Like that's just not stuff that most normal everyday people could just whip up. So if you have help in templates, then it's like a lot easier.
Absolutely. And as we kind of transition to the seller side of stuff, I can only imagine because in my line of work, I kind of get all sorts of people with different expectations, but typically I will run into a lot of people who think that insurance is just like a click of the button. And my sales cycle for even simple life insurance is sometimes 30, 60, 90 days.
Yeah.
So if someone is even interested, even just a little bit interested in buying or selling a business, they should contact you like now, right? Like give
Yeah.
people kind of a timeline.
Yeah. I mean, ideally, I would love to get in touch with them and their CPA like 2 to 3 years out so we can make sure the books are like just the best they can be, right? Because sometimes people put personal travel, personal meals, weird Sam's Club, like $500 of groceries that they said was soda for the office, but it wasn't. Hey, we can just nix all that for 3 years and have 3 really clean years that we don't have to do a bunch of ad backs and a bunch of weird stuff because the thing is, if you put in a pool at your house and you're a contractor, right? I can't really prove to the bank that that's true. So they
Hmm.
probably won't give you back the credit for the $100,000 pool that was at your house. So just like avoiding those things and making sure them, the CPA and the bookkeeper are all on the same page. If we can have 3 years clean, then they can get top dollar. I totally get people want to save on their taxes, but they're shooting themselves in the foot by doing it that way if they're wanting to sell their business in the next 2 to 3 years because we really have to go by the taxes. That's the legal document that basically the bank's going to say your business made this on the taxes, so we're not going to give you double that. So there's some
Um,
things we can do, but there's not a lot.
Absolutely. And I'm going to say one thing that people get confused about is I'm a CPA. Not all
Yeah.
CPAs do exactly the same thing.
Right.
So I do know about taxes, but my expertise was always in M&A. I did corporate M&A, so I totally
Yeah.
understand Maybe we can dive into, like, you've mentioned ad backs, you've mentioned
Yeah.
seasonality. So those are all the things that we would look at when we're analyzing a business buy or sell side is, okay, what were non-cash expenses that need to be added back to EBITDA to get to cash flow? Is this a seasonal business? How would we smooth it out? What's non-recurring revenue? Because, like, for example, in the healthcare industry, when COVID happened, business was booming. We had to actually strip out revenue because, hey, this was one time in nature. It's not going to be like this ongoing. But to keep it just simple for this first discussion, tax CPA they're awesome. But you have to
Yes.
remember what a tax CPA what their incentive is. Their incentive typically is to reasonably, legally, and ethically minimize your taxes.
Yes.
And there's a time and a place for that. And the reason why I want to encourage people, especially from the sell side, if you are thinking about selling your business, to have conversations with people like you, Ashley, is
Yeah.
because you also need to be in touch with their CPA, their
I
tax
do.
CPA, and let them know the goal. We have to plan around the goal. So it's not always oh, they did something wrong,
Right.
but it's hey, how can we position your tax returns legally, ethically, compliantly
Right.
to get you to the goal of selling the business? And selling a business is a different goal
Yes.
than just minimizing your taxes.
Right.
But I'll say I run into people who kind of point the finger at the CPA, which I'm not talking about me. I don't do that type of work, but a little bit unfairly sometimes because they never communicated to their CPA, hey, my goal is in 3 to 5 years, I want to sell the business.
Right. Correct.
And so having those conversations proactively is what puts you in the best possible position.
Yeah, and I mean, we have one right now that would have liked to put it on the market last year, but unfortunately, due to the tax returns, we cleaned up 2025 and figured the new goal out with the CPA. So that one's going to be pretty. And then we're going to do 2026 and then we're going to put it on the market because it was just too egregious with personal things being on there, cars, beach house, just stuff like that. I can't add a lot of that stuff back because, like I told you, with the SBA, when they go through it with a fine tooth comb, it's like, if you said it was for marketing, how do I know that it wasn't? So there's only so much that I can add back, and I don't want to tell you I can do it, and then the bank disagrees, and we're way off on the price. So I'd rather just get cleaned up, put it on there where it's all neat and tidy. Because the more explaining I have to do to a buyer, being the selling broker, is like, they're getting squirrely. They're like, I don't understand. Why would they do it this way? Why isn't it clean? And then they just don't want to pay as much because it's confusing. They don't understand. They think it's sketchy. So doing all that stuff and trying to put ad backs just makes a mess. Now, it's one thing, like you said, to get to EBITDA, SD, whatever. Yeah, like your personal insurance, because that's a seller benefit. Your personal car, if you have it on there, that's a seller benefit. Those things are easy, but depends how egregious it is. You know, if it's your personal ATM, we got a problem. Like, I can't do that.
I totally get it. I've seen it at all levels, and it's interesting that you bring up the marketing ad back in a higher level, say like $100 million to $500 million transaction in terms of enterprise value.
Yeah.
People are sophisticated nowadays. Whether it's $1 million deal, I would say in some respects, $1 million deal is going to have higher scrutiny than a $500 million deal in some ways, because that person who's making $1 million transaction, that's probably 50 to 100% of their savings, of their nest egg going into it to some degree, versus a $500 million transaction. It's hedge funds and private equity who
Hmm.
kind of play the volume game, and if one deal goes bad, it's not the end of the world.
Correct.
With AI, people are sophisticated. Anytime a seller advocated for a marketing ad back, whether it had anything to do with personal expenses or whatever, even if it
Yeah.
was completely justifiable, we had to explain, well, hey, what is your average revenue per marketing dollar spent? Because if we're going to add back, say, $50,000 in marketing, if that made you $100,000 in revenue, we have to take out the revenue. And all of a sudden, it was like, well, you're good. We're not going to add back the marketing expense because
Yeah.
that's typically, especially in down markets, people cut marketing. That's one of the first cuts that they make. And it also hurts revenue a lot of times too. And so I think that will be helpful for people on the buy and especially the sell side, is understanding that relationship between a marketing ad back and a revenue component as well. It's not one or the other.
Yeah. Well, and to your point, if I'm selling a $1.5 million business to your cousin, let's say, he's putting his house up,
Yeah.
on an SBA loan. His house is on the line. So you better believe that he's going to hire his CPA to look through the books. He's going to have, he and I have a lot of conversations going through the books together. The other valuation will be done as well. But his house has to have an appraisal because his house is going up. Like,
Yep.
Private equity guys are not going to lose their house. So
Right.
you got to understand, like, you're asking someone to put their house on the line to buy your business. They're going to expect the books to be in order and clean because that's scary. That's talking about being risk adverse. Businesses also.
I'm more risk averse. I'm surprised I'm in the industry I am because I'm like, oh, give me the whole life insurance, give me the bonds. I'm good with my 5 to
Yeah.
10%. I don't need anything else.
Yeah, but like for me, I mean, I've had at one time, 10, 15 mortgages, right? Because I had a bunch of rentals at one time. I wasn't worried at all. I never was worried. But when people are like, oh my gosh, you should buy this business, I'm like, and put my house on the line? I don't know. But so for me, I love my job, right? I love doing this. So I know, based on what I know, I would have to give this up and do that. So to make sure it would be successful and make sure my house is on the line, whatever. So I'm kind of like, because I don't really believe that there is completely just no work involved in just getting free money. Like that doesn't really exist. Like if you do some good investments with you, maybe, but like buying a business is right. So for me to put up my house, I'd have to be in it to win it, right? So I've got a lot of clients and a lot of listings and a lot of stuff going on. So I can't be in two places at once. So it's like sometimes
Absolutely.
I'm like, dude, I would love to buy that. It's awesome. But you have to know, like, you have a plate, right? You can't only put so much on your plate. Like, you got your family, you got your dogs, whatever, work. You don't really have room on your plate for 2 full-time jobs. That's not really a real thing. Now, if you're like, hey, do you want to buy a vending machine? It's like, maybe, but like, that's probably not going to meet my goals, right? Like, that's.
Well, as we kind of round out the conversation on the sellers, is what I see a lot of is just a misunderstanding between what I call a value business and a lifestyle business. And I make
Okay.
no judgment. There's not one right answer or wrong answer, but a lifestyle business to me is kind of similar to what I'm doing right now. I work with a team in insurance and planning and all that good stuff. I'm technically self-employed. What I
Right.
do, what I produce funds my lifestyle. I don't have employees, I don't have overhead. On the other hand, there's a value business, which is basically a business. It could be what I do, but it's more scaled. It's you have employees, you have systems, you have processes. What I try to tell people is typically the less important you are to the business, the more valuable it is.
Right.
And what I see is a lot of people who think they have a valuable business, but what they really have are assets
Okay. Yeah.
and some handshakes. Like, I mean, they have a book of business and they have a truck and maybe they have a 1099 crew, but no W-2 employees, no HR onboarding, no really tangible systems and processes. I guess where I'm going is if you want to sell a business, what practical advice do you have someone who's starting out and their goal is, hey, in 10, 15, 3 to whatever the timeline is, I want to sell this business because
Yeah.
I know from at least my experience, it's not going to go so high if you don't have systems and processes in place.
Yeah. Well, so number one is going to be the majority of buyers do need a loan, right? So we could start there with like, what does the bank require for like SBA, let's say? So SBA goes up to $5 million. Typically, it's usually businesses are a little less than that because your average mom and pop business around here is going to be probably 1.5 or less, right, in our market. So that's called a Main Street business. So a Main Street business that a normal person would buy with 10% down for SBA, you're going to need 5 years or older. You're going to need several employees. You're going to need, like you said, like employee handbooks, like systems, like key employees in place is one thing. Because again, like if you're the business and that's it, like the bank's going to be like, so then when Sean leaves, like, I don't know. So, if you have a lawn company though, right? Like if you're the sales guy and that's it, I can easily sell the bank on my new guy being the sales guy, right? Because he's already done sales, he's super charismatic, they call him, they love him. Cool. Swap, right? That's easy. But if it's something like keeping CPA and this guy's not even a bookkeeper or CPA, they're like, wait, what? How is that? So you need to, like you said, minimize yourself and have key employees. Like you can still work there and be like the office manager or be like the manager or whatever, but then have someone else that's the assistant office manager, have someone else that's the CEO or CFO or, some high level, team person for the cruise or whatever you want to call it, team leader, supervisor. And then when you leave, also, you can only have one job, right? You can't be you and your wife and you have two jobs and then now there's three people you need to hire. That's overwhelming for buyers. That's overwhelming for the bank. You need to have like one job that can be replaced by who's buying it. Stuff like that. Now, if like your wife is like at home doing the books, they can say they could hire a bookkeeper. That's fine. But if you've got like a husband and wife team and it's basically them, it's going to be very hard for me to sell that business because that's two full-time jobs and no key employees. Now, if you've got the one that goes to like networking events and bopping around and then the husband works there as the manager, but they've got key employees, I could sell that. So it's about the structure and it's about the books. So we need 3 years clean tax returns that match the P&Ls, that match the bank statements, and I need monthly. And so like to your point with the seasonality, 2024 was what in September versus 2025? Let's see what happened here. They did this marketing and now it's up. Okay. And then of course, the bank wants to see an upward trend. They never want to see a downward trend. It's hard to sell a sinking ship. And the other thing is the customer saturation. So it's great if you're doing stuff for Lee County, but if that's 30% or more of your business and the new guy buys it and they don't like him, then what? He's in a bind. So you really can't have like one customer that's 30% or more. If you have that now, you need to grow more until it's more, across the board because that's too scary for a bank to take on. It's too scary for a new buyer to take on. Because again, if it's a personal relationship handshake, to your point, then I come over there, they're like, oh, I don't like Ashley. Like, whatever. So I liked Ron, and now Ron left, and I'm butthurt, and I don't want to use them anymore. So then you're like, well, that was like how I was going to pay my guys. Now I can't pay my guys. Oh, you need to think about that. And then there's also the employee retention. So if you have, 5, 10 employees, let's say an average small business has about that many employees, are they going to be willing to stay on if they're treated well, compensated well, etc.? Are they going to have like a big fit about it? That's a conversation that we have to have. Now, 9 times out of 10, when the transition is done properly, I have not had problems with the employees staying on. I try to coach the buyer on having meetings with the seller and doing a couple month transition period where it's like, hey, guys, surprise, this is the new person. But I'm still here for XYZ months, and we're going to make sure everything is kosher. Y'all are still going to get paid. Everything's going to be cool. And when I think everything's good, I'm going to step out, but I'll still be available via phone for this amount of time for you guys or whatever. They can agree on that. We put some of that stuff in the offer and stuff like that. But, sometimes they still call them, do some consulting, or they help with an employee or something like that. Because, even if you have a handbook, all of a sudden it's like, crap, which vendor supplied this? And you don't know. So you can still have that relationship with them like, crap, I need help. And most of them have been so great. Like one of my businesses, the guy ended up staying on as a sales guy. So it's like, he could do that because it's not actually like his real job and it's just a part-time position. But
Right.
they did the transition, then he left, and then he came back on to 9. So that was okay. But there's just structuring it to look at, like, put yourself in the buyer's shoes, right? Does this look easy to step into? Does this look manageable to step into? Can I hand you my phone and my laptop and like it makes sense? Or is it a mess? Like, is the books, do we not have QuickBooks? Do we not have things organized? Are we using pens and paper for our quotes or things like that? Like, we need to be on iPads at this point or whatever, like connected, right? So it's easier for people. Or, so your sales guy is in his car and he can still just do it on the tablet and it comes back to you and then you send to the manufacturer or whatever. Like, you need to have things in place. Or if not, what I usually recommend is like an interim CFO, CEO position, and then get those things in place. Then we get it on the market. And I can help people with that too. Because if it's too scary, it's going to be too scary to a buyer. If I think it's scary, that means it's scary.
Yes. I was going to say an old phrase that we used to use and you brought it up, businesses trade on trends, not exactly dollars. They
Yeah.
trade on the trend. And I think what happens is people kind of put this stuff off because in the beginning, yes, getting customers and clients is super important, but working on the business is different than working in the business. And there's a time period where if your goal is really to sell, you're going to have to spend time on the business, not just in the business. And it has to be organized. It has to be structured. It has to be some type of process. I help a lot of people do really well is attract and retain talent. And that's through key person insurances and employee benefits. Just real quickly, do you actually see tangible value when you sell a business, one with employee benefits versus one without employee benefits?
Oh, yeah, I do. And I think the buyers do too, because think about it this way. If they don't have that in place, what is the new buyer thinking? I'm going to have to get this in place to fix this problem with our employee retention. How much is that going to cost me? So how much less money am I going to make? That's what they're going to be thinking. And then not only that, it's like if you don't have any type 401 plans, it's really hard to keep older people, to keep people for a longer term. Just think about like your typical place that has a receptionist, that's got a bunch of guys in the field, maybe not a couple of guys in the warehouse. Maybe it doesn't matter to them today when they're 25, but 5 years down the road and they talk to someone like you or their grandpa or their dad or someone, they're like, hey, do they do like a 401k? Do they have any kind of match? Do they have any kind of like bonus structure where if you do this and we'll put in this? Or do you have insurance? Like when you get older, you realize, hey, if I get hurt, like I need to have insurance. And like when you like have kids or have a family, you're like, hey, like I need to have life insurance. I mean, that's not necessarily through your employer, but it can be like cheaper if it's a plan through your employer. Because like for people like me, I'm 1099. I just got to figure it out. Like that's not great, but it is what it is. But having those things in place and having those to be offered, even if they don't take you up on it, I find is a very value because the business is just more like esteemed by buyers because it's more professional. It's being treated like a business. It's not like it's acting like it's being ran out of your garage. Because also the buyer is probably coming from another job, like an actual job, and they need that too, right? Insurance too. Because when they
Yeah.
quit the job and buy the business, now they don't have insurance.
It's a
So
great point.
that's another thing. If there's not anything in place, it's kind of like, what? And then sometimes you have this weird, they could buy Aflac if they want. It's like, no, like you need to have things in place if it's a real business because people are going to come in just assuming now they have an added cost. They don't really know what that cost is. That's stressful. And then that's another thing they have to deal with in the transition period. So I think that's really important. That kind of goes up there with like the goodwill and trademarks for me. Like it's hard to put a price value on it, but it's just like, is this a bronze, like silver or gold quality business, right? And if the books are in order and they have a great bookkeeper and they have insurance and they have options for their staff, they do Christmas bonuses, they do the things right. They do like a monthly lunch, they do team meetings, everything is running well. It's just an added value. It's just like if you buy a house, right? And it's already been repainted, new carpet. You're probably gonna get more money for it, even though it's really not worth more money. But it's like I'm like, now I don't have to do that.
Yep.
And it's just easier to sell, right? Because I come in there, it's clean and ready to go. It's the same thing with a business. I mean, all these things are hurdles and objections that you're going to have from a buyer that they're going to have to figure out. So if you have these things figured out, they're like, you want, okay. Like, it sounds like I can just jump right in. But if it's like you want 800 and you've got all these things you need to do, it's like, I don't know, I'd be more comfortable like, five, six. And then you're like, they're beating me up on the price. And it's like, well, there's a lot of stuff they're going to have to do now. Or even like the offices. Sometimes you go in these offices and it's like from the 80s. It's like, well, yeah, they're probably going to want to buy new furniture and like not have like this old weird brown carpet, but they're seeing it as an expense that they have to do now. It's the same thing with like trucks. Like if you have a truck and it's like 20 years old, I don't want the truck because I'm seeing my guy getting stranded on 75. So I don't really want to pay you for the truck. But now if you had gone out and bought a whole new fleet of trucks, great. I'm happy to pay for those trucks because my guys have new trucks. They've got a warranty. I'm not worried about them. The insurance is easier because they're not like 100 years old, because most businesses need to have insurance with towing and rental car and all the stuff. Like that's important thing. So if you've got all these old equipment that's you're not even using anymore, we need to take that off the books and just get rid of that. Because if you're not using it, it's just collecting dust. And that's the type of things that the people do. You want to run the business like you're not selling it. So you don't just get the trucks if you need them. You get a new dump truck when you need it. You keep doing all the things so the new person can just step in. And I think that's the difference between getting top dollar and a subpar offer is people feel someone took their foot off the gas, feel like they were not making decisions as if they were still going to own this in a year. And I think that's where you can really lose a lot of money. I really think so.
My last question and kind of round things off is I know a lot of business owners currently who come to me, ask me for just kind of business advice
Yeah.
on how do I get to the next level. And a lot of this is kind of the trades typically, or even like doctors offices, doctors practices, where they're trying to get out of the seasonal slumps, and a lot of
Yeah.
them are looking at the ways where they can basically implement what we'd call recurring revenue, whether that's, hey, $200 a month and we come mow your lawn 4 times every weekend, or an AC looking at implementing maintenance plans where they pay an annual amount and they get a couple checkups. Do you have any tips on practical steps to start building those recurring revenue streams for those kind of business owners looking at that next step?
Yeah, so I don't do a lot of medical, so I don't know if I could help a ton with that. But I know, like, with selling them, the main thing is they want to have the provider contracts in place with the insurances. So I would definitely say to make sure they have all those in place would be step one, because I think a lot of those providers too will pay them more per client if they're making sure they get their annual physical or like weird stuff like that, for example. But I know, like, with talking to the business brokers that do just medical, it's a lot based on the providers and those relationships. So on the flip side, with like, let's say like a pest control or something like that, I've seen them have a lot of really good success with hiring an extra sales guy and then just getting their business up and up and up. And then, putting another truck out there, like, they just got to keep rolling. And it can be painful at first, but you've got to be all in. And I think that really shows to your customers. And then you need to get those referrals. You've got to ask for the referrals. If you've been doing a, house for a while and like they're happy, I mean, doing stuff like, the referral trees and paying the businesses that do those, like Brand Defender is a good one that's local that I've sent people to, and they've got the QR codes, they send the emails, they do all the things, especially for restaurants, they'll put the thing like by the receipt or whatever. But trying to get those reviews and trying to get yourself higher on Google is also really helpful. I'm not super familiar with Google Ads, but I feel like the organic reach is a lot better now because I think people read sponsored and they're kind of like, I don't know, I'm skeptical. But one of those businesses, I've definitely had good luck with Facebook and Instagram ads, especially Facebook around here, because the older people that are on Facebook, their friend likes it and then they see their friend likes the page and stuff like that. But it really depends on the business. But I think, having people out there, having a good representation in the community of yourself, going to charity events, donating time, donating services. I know there's a lot of people that donate services to like the shelters and like the women's shelter, the animal shelters. And I know all those people will tell a lot of people about that. So I think that could be a good thing.
That's awesome. But Ashley, thank you so much for coming
Thanks for
on.
you. This was so fun.
Yes. And we're going to do this again soon because we definitely have more to talk about. I want to dive deeper on, maybe we do one on just the buy side and then one specifically on the sell side. But you gave people a lot of amazing, practical, no nonsense advice and help. So just real quick, what's the best way for people to get in touch with you?
So my website is just www.ashleysunshinebroker.com, and my Gmail is the same, ashleysunshinebroker@gmail.com. Ashley Sunshine Broker. But all the socials for free advice and tips, and then yeah, my cell phone's on my website too.